All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. It's the jacket, I guess, right? All right, who knows? But either way, we got to put a smile on our face and kind of get through some of these prices because some of them aren't too good. But let's start with corn and see what we can get going here. Well, let's bring that big corn board up behind my big head. We're 12 and a quarter cents lower in July corn. 5.84 and a quarter is last. That's 3 and a quarter cents from the lows. Not too good. Deese is off 12 cents to 5.17 and three quarters, and that's a penny and a half off the lows there. So that's corn trading on its heels. Soybeans lower as well, 17 and a quarter cents lower in July to 14.16 and a half, 6 cents from the lows again. And we've got Nove down 17 and a half cents to 12.55, and that's about 4.5 cents off the lows there. Wheat in Chicago, the Chicago wheat, that's off 16 cents pretty much across the board. July's down 16 cents to 6.38, 5 cents from the lows. Deese is off 15 and three quarter cents to 6.67 and a quarter, 6.67 and a quarter. There you go. That's Chicago wheat. How about Kansas City wheat? Hard red there. We actually have a little bit of an up arrow, a couple of them. July's up 1 and three quarter cents to 8.46 even. But we go out the deferreds to Deese. That's off 5 cents to 8.25 and a quarter, and that's about 7 and a quarter cents off the lows, and about 9 cents off the highs. Just to give you an idea, kind of in the middle, I suppose, right? Spring wheat in Minneapolis, what's that doing? 1 and a quarter cents lower. We kind of turned back to the negative side here. July is trading at 8.42 and a half, and we've got a Deese price that's 8.49 even, which is only a quarter cent, one tick off of unchanged. So that's not too bad. We're building a little bit of a base, maybe. All right, let's talk about cotton for a second here, and we'll get to our guest analyst. July cotton's off 231 points to 80.99, and we've got Deese off 196 points to 81.04. That gives us the opportunity. That's a good segue to bring in our next guest analyst, Tommy Grisafi. He's in Valparaiso, Indiana, with Advanced Trading. I just rattled off some numbers for it. You know what? It's been rough ever since the radio show this morning. I'll tell you that. Just that cancellation didn't help either.
No, we were down pretty good before that, and it felt like maybe the markets would open and rally, and that cancellation came out, and every single futures market was offered below the low of the day coming out of the gates here at 8:30. That's what happens, Scott, when your number one customer can just tell you, give you the bird. I don't know how else to say it on live TV, but China just said, nah, we're good, bro, and they walked away. And then they'll come and buy it all, and we'll be like, oh, thank you, China, you're the best.
Yeah.
But it just shows that we have such a weak stance around the world. We have no ability to flex our muscle. And we're like, oh, please buy our grain. We're going to have to find other things to do with corn, wheat, and beans. And wheat being is showing a little bright spot. Now, with that, after that little rant, it's wet up north. So the boys up north started planting 5-10% in North Dakota, getting rolling, planted. Boom, big rains, big rains, more rains on the way. Look for a lot of people up north to be out at least the next 7 to 10 days if these rains hit later in the week. That, my friend, then brings up PP as we look into the last week of May. It's really important to remember, folks, last year at this time, corn was $7 on its way to $8. Right now, we were $6 on our way to $4. These corn's about $5.17, call it right now. When you have a $5.91 crop insurance level, you got to think about what you're doing here as you go to plan those bushels. One last thing before we go on commercial break. I'm going to talk right through you, give you just a little time to relax. This isn't, bull markets don't last forever, and this one very well might have ended. There's going to be continued volatility, but it's headline driven, and we've went through our Costco toilet paper moment. The world doesn't need grain right now like they used to in years past. Back to you, my friend.
Well, yeah, a lot of what you say is true, Tommy. And what I don't like about it is I get a lot of the research that I'm sure that you guys get, and you probably put out some too. But I don't like trying to bank on a weather scare this early in the season. I mean, we've kind of taken a lot of the weather out of it. April was rough. May started off to kind of be rough as well. We've got a demand issue where it's not really in demand, and now a lot of folks are turning their eyes back to this weather scare, and that's what's going to have to take this market higher. Who knows? But I don't like having to go to that, in the beginning or middle of May when we're still putting the stuff in the ground. That just doesn't bode well for me. All right, stay tuned. Stay there. We're going to go away. We're going to take a quick break, pay some bills. We're going to come back and talk more with Tommy Grisafi, Advanced Trading in Valparaiso, Indiana, after this. All right, welcome back to, let's get that. Welcome back to Market Day Report. Let's talk about the livestock. Let's bring up live cattle. Let's see what we've got going on in Chicago. And look at that. Let's take a picture of this. Everything's up. June's higher by 55 cents. That's the old double nickels on the floor. 162.97 is last there. Going out to the deferreds, we're up between, say, 40 to 82 cents across the board, right? The deferreds are up 40 cents to, let's go to D. So that's 40 cents higher at 169.27. So a nice, quiet, little higher live cattle board in Chicago. We like that. What about the feeders? What do they look like? They also are putting on some real estate here, almost $2 higher. August is $1.95 higher at 225.05. Going out the deferreds, we can stop at, say, October. That's up $1.67 to 230.67. So that's only a tick off the highs there. Good stuff. Feeder cattle, live cattle. We like to see some green on the screen after what we just witnessed in the row crops. And then we'll take a look at lean hogs. Maybe we're putting in a bottom here. Every time I say that, I jinx myself. But June's up 92 cents to 84.22. And we've got July up $1.17 right behind it to 86.45. Let's use that as a segue to get our guest analyst back. That's Tommy Grisafi. He's advanced trading in Valparaiso, Indiana. Tommy, have we put in a low for the lean hogs, or what's happening?
Oh yeah, absolutely easy questions. Money back guarantee. If it's not in a few weeks, we'll just come over to Valpo and we'll write checks, right?
Yep.
I'll tell you this. I did buy for myself and a few clients. We bought some hogs and sold some cattle. Now that is speculative. You're a hog producer and you're not hedged. Buying hogs and selling cattle isn't going to help you. But from a mathematical standpoint, it is time to go to the store and back the bus up and put some pork in your freezer, because hogs and pork is extremely cheap versus cattle. So grilling season's coming up. We want to be long pork chops and short burgers, brother. And watch these spreads go. I mean, earlier today, I was able to buy the hogs down 60, sell the cattle up 60. Let's keep an eye on this trade. We'll talk about it more. I'll even admit I was wrong. I did the August contract. So we'll watch this level and we'll keep talking about it. Maybe McDonald's is bringing back the McRib. Back to you, Scotty boy.
The McRib. How about the McTommy? All right.
You've had a McRib.
Yeah. Oh, sure. More than one. Thank you for that, Tommy. We're going to bring it back. Thanks. That's Tommy Grisafi, Advanced Trading in Valparaiso. We'll bring it back here for Suzanne and I to giggle. But